In this presentation, we will discuss the Paycheck Protection Program and the Economic Injury Disaster Loan Program. This is our second presentation on this, so you can look at the prior presentation for some thoughts on it there. This is something that's changing basically as we go, so this is going to be evolving as we go. I'll give you my current thoughts on it at this time. Now note there's some overlap between these two programs, and they're starting to come together. We're starting to see how these things are going to basically be related, or I think it's becoming more clear how these things are going to be related. I'll give a little bit of background on that as I understand it. Also note, for terminology's sake, the PPP is what will often be abbreviated for the Paycheck Protection Program, and the EIDL for the Economic Injury Disaster Loan Program. Now, the first place you might want to go to get some information on this, and this is evolving all the time. I looked at this website yesterday. It was different yesterday than today. So we have the U.S. Small Business Administration, the SBA. So you can go to this page. We'll have a link down below, and you'll have kind of an overview. Now, as I go into this, just note that this is not the place where you're typically going to go to fill out, or currently, the Paycheck Protection Program. And it looks like that's going to be designed to be rolled out through the lenders, basically. So you're not really going here, although you can get information here. When you go to this website, if you actually get to an application page, you're looking for an SBA type of loan, which are going to be basically these three type of loans typically. The new program is the Paycheck Protection Program, and it possibly tomorrow could be where it would start application processes, but doesn't look like you would go here for it. Looks like you're going to go to your financial institution, which you could probably start off with your bank. Now, also note with that many people are probably going to be doing that, of course, and this might be the loan, looks like most likely, that will have the greater overall benefit for a lot of different organizations. So then the question, of course, is going to be, well, if this, how do we look for that type of loan? If you talk to your lenders on it, it's quite likely if you talk to your bank that they're going to say, hey, we're doing the social distancing thing, and so it might be difficult to contact them. However, most of them, of course, are prepping for this and preparing for it, and you probably want to check their website. For example, if you go to the Wells Fargo website, Small Business Paycheck Protection, and you're looking up, hey, I need information on this PPP plan. So there's a lot of resources to get information on the PPP plan, and we'll talk more about, where you could go for that. You want to go to the source documents, but the bank is really where you want to go in terms of, well, how am I going to get through the actual application process through this, because this is where the bank, it'll be at the bank typically, and not generally at the SBA website, although you can go here to get information, and they're trying to integrate this information so they can put this together in a logical way to deal with this, to deal with the issues here. So we'll talk more about that in a second, but just note that if you go to your institution, if you call your institution, they're probably going to say, hey, we're overwhelmed with calls, and they're probably going to be pointing you to the website, and something like the website here has the information on it, including the main question for the bank, which is, when will you start accepting my applications, right? I want to start sending this in and processing the paperwork. And it says here, we do not have the start date yet. We'll publish the date here as soon as possible. When we are able to take applications, you'll find that link on this page as well. Please note that you will only be able to apply online, not by phone or branch. So of course, they're keeping in alignment with the social distancing, although it's not going to be going through the same website as the other kind of loans with the Paycheck Protection Program. It's going to be going through the bank. The bank looks like they're going to be trying to, of course, comply with the social distancing as well. So what you want to do in terms of the application is keep on checking the application process. Now, when does it start? It looks like tomorrow, the 3rd through the 10th, is when the starting applications could be, depending on basically where you fall. So you want to just keep checking the application process there. Now, if we go back to this website, again, SBC website is not where you would actually have the application, but good place for information. So if I go down, and again, this is changing daily. I looked at it yesterday, and it changed from yesterday to today. And I want to just give kind of an overview of the correlations, or how this works, how I understand it, and that gives kind of like the spirit of the law, and then maybe that'll help you to think about what actions to take at this point in time. Just notice that the SBA is something that will typically take care of. If there's a disaster, oftentimes somewhere in the country, the SBA typically has the loan process and handles that loan process, and we've done that many times. They're very good at that at this point, because they've done that. Obviously, now we have a very large component. It's not an isolated place, and therefore the application of these things are now much larger over the whole nation. So that would mean that the expansion here of the SBA loans is basically that kind of program, that functionality. It looks like to me, is trying to be expanded to the country who is being affected by this. And then on top of that, of course, then we have this law with the Paycheck Protection Program, which is something a little bit different, right? And so now the question is, now that you have these two things happening, what are they trying to do with them? They're trying to get the best of both worlds on it. And my kind of overview of what that would look like is the primary loan here. It used to be like an SBA loan. Typically, you would think of a loan that has good interest rates, the money, they're trying to get the money out quickly to help people in a short-term disaster kind of problem. That's kind of like the design for it, get the money flowing quickly and then have good terms and good rates on it is typically the idea, but it's usually still a loan. Now you can see they're emphasizing here the EIDL loan advance. And the loan advance is this loan advance will provide up to $10,000 of economic relief to businesses that are currently experiencing temporary difficulties. And note that it says here, I just clicked on that page, it says this loan advance will not have to be repaid. So now we're talking about a loan that here in that advance that you may just get the $10,000. Doesn't look like there's strings attached to it if you qualify for that basically advance payment. And then the PPP loan, it looks like is geared towards something a little bit different. It's geared towards more long-term financing to keep the businesses going, to not panic and lessen the business, but keep obviously employment in place with the hope that after this is over, then the employment will maintain where it is at. So at this point in time, then the question is, the spirit of the law would be, it seems to me, that if you're having a problem or if you're short on cash immediately, need money immediately, then you're probably looking more towards this item to get the short-term financing. And then the Paycheck Protection Program is likely to give longer benefits and have a forgiveness of the debt, but the funds won't be there as soon. And so then the question, of course, is, well, what should I do at this point in time? Note that this program, of course, was rolled out before the Paycheck Protection Program. So there's going to be some people that have already applied for this program, and there's going to be some people that have not. And and the question is, well, if I have applied for the program, can I apply for both of them? And typically you can apply for both of them, but it looks like if you're doing, this from what I can see, and this is what I think from what I'm looking at, that they're trying to pull these things together. If the Paycheck Protection Program is for the same types of funding, such as payroll and the general funding of the business, then what would typically happen is you'd basically refinance this loan into basically the Paycheck Protection Program if it's for the same type of funding. That's what I'm gathering out of this. So then that means that if you already have the $10,000 loan out there, you could still do the application for not even the $10,000. It could be any of the loan. You could have an SBA loan of some kind out there at this point, and then try to apply for the Paycheck Protection Program and possibly get a greater benefit given the Paycheck Protection Program, although there are different restrictions for it. Now, if you did that and you've got the $10,000 already in hand, and you then go to the Paycheck Protection Program and apply for it, are you putting that $10,000 basically at risk now that you have to basically go through the hoops of the Paycheck Protection Program? I would think that you may be because the $10,000 over here looks like it's not currently there's no strings attached to it as much as over here, where you do have to do some reporting later for them to forgive the debt, but the debt that they could forgive may be greater. So there's some kind of things to think about within those two. And then what if you haven't taken this loan yet? What if this was out, but what if you haven't taken this loan yet, and we know tomorrow up until a few days after the starting of the application for this loan is going to be here? What should you do in that case? Well, and I would think the spirit of the law is something like this, right? If you need the money right now to keep current operations going, to keep going from the day to day, it looks like this one is going to be faster. The turnaround time is going to be faster. However, if you're okay in the day-to-day, the current as of right now, then you may get more benefit from the Paycheck Protection Program. And we'll talk a little bit about, where that line is, where's the break-even kind of line and stuff. But it looks like you'd probably get more benefit over here. And this one over here is designed to go through the application process. So if you can go through the application process and wait a little bit longer to do it, I would think that this is where they're trying to get you to go. And if you need the money immediately, I would think that this is where they're trying to go. So this is like the more, people that need the money, right now and want to and have to get the money just to pay for, to get through the current payroll and whatnot. And then these are for the people that can wait it out and possibly get more benefit, but it might take a little bit longer for the processing. So now what if you're in a situation, so that's from the spirit of the law kind of thing. Now you might say, well, why wouldn't I just apply for this one, get the 10,000 in my hand and then apply for this one over here? And it looks like you could do that, but I don't, if you don't need the 10,000 over here, I think it might be, against really what the law is designed to do, because they're designed, this is for money that you need quickly. That's what it's designed for. And then this one's for the long term. And it could cause complications if you do that as well, I would think, because, if you like today applied for this loan and then tomorrow you applied for this paycheck protection loan, and then you're trying to refinance the loan, if you already have one loan out there and they're kind of combined and the bank has to then refinance, well, it's going to make it a little bit more difficult. Now, if the loan was already out there and it's already been processed, then at least they can start that refinance process and it shouldn't be too bad. But if you tell them, I just applied for this loan yesterday and now I applied for this loan today, I can just imagine from a bureaucratic standpoint the bank saying, well, we got to wait for this loan to be processed so that we can refinance this loan. And there is a timing issue here because you've only got so much time for it. So I would think that for multiple reasons that if this one's more beneficial for you, that and you don't need the money as of right now, then this is the one you'd want to go with. And if you need the money right now, then you're looking at SBA loans and you want to look at that option, and then possibly for the refi. So again, that's just my interpretation of it. Now I'm going to basically be emphasizing now the Paycheck Protection Program. It's not quite out yet, so that one, the other thing just to note between the differences between these two, the economic injury disaster loan, again, we already said it's a lot faster. The application is online, it's on that website, pretty quick application process. We can kind of see, I think that we'll take a look at the application process here for the Paycheck Protection, but it's not out yet. We can just look at what is out at this point in time. So some questions we get on this is, where do I go for the loan? Remember that you can get research on this loan, both loans, at the SBA, but this loan, the Paycheck Protection, is going to be distributed by the lenders, not at that website. So in other words, you want to go to the bank. So, and then the question, of course, can you do both loans? I don't think it's within the spirit of the law really to try to do both loans unless you need the money for the short term and then do the long term. I think that's what it's looking like it's designed to do. So just keep that in mind. If you do both and they're for the same purpose, then you'll probably have to go through a refi. If you did this one first and then do this one, you'd have to probably go through a refi process, and it could complicate things a bit. But if that's what you need, if that's what's needed, then that's what's needed. What are the pros and cons of the two programs? Note that this program, like we say, it's probably going to result. We'll talk a little bit more about what's the requirements of it. You probably get more benefit, but like I say, it takes a little bit longer for this program to be processed, and there's some more restraints. Also note that the money that you have now should be forgiven if it's used for the purposes that it's going to be used for. But you do have to show evidence in the future of that, whereas this money, at least the advance payment, may have less strings attached to it. So and obviously the application process is right here and now, and it's an easier application process for there. So what if you've already signed up for this one? Again, if you've already signed up for this one, then that doesn't really stop you from going to the Paycheck Protection Program, but it's likely that you're going to have to consolidate that. So just be aware of that. And then there's the question of, well, how am I going to calculate the Payment Protection Program loan amount? So if you take a look at the actual application, we have the links to this below. So this is the Paycheck Protection Program. This is a PDF file. Again, it looks like it's going to be an online thing through the lenders, through your bank, but you might want to, you can download this and check it out and have everything there for you. The actual calculation, this is business and typical information. The main thing looks to be right here where it says the average monthly payroll times 2.5 equals the amount here. So that's going to be the amount. So if we go down below, we get a little bit more detail on the instructions. So obviously our next question is, well, what is the average monthly payroll? If I go down to the instructions in the form, then we'll get some definitions of that. So we're going to say, okay, for purposes of calculating the average monthly payroll, most applicants must use the average monthly payroll for 2019. So that's last year's tax return. Now, if you have payroll, then you've already, you've processed the payroll tax returns, the 941s and the 940s, but you may not have processed the actual, federal income tax return. So because there could be an extension on that, and you may not have actually filed that. So you might have your payroll information, but if you're something like a sole proprietor, for example, then we'll talk a little bit more about that. It could be a little bit more complicated. So in any case, you should have your 2019 if you have employees, and of course processed the payroll, even if you haven't filed the federal income tax return yet. So excluding costs over 100,000 on an annualized basis. So they're basically saying, you have to take out the people that earn over 100,000 out of your calculation for purposes of this average monthly payroll number. Now, I don't mean you have to remove them completely. I mean, it looks like you have to cap them at the 100,000. So if they made 350,000, then for purposes of this calculation, they made 100,000. I believe that's how it's going to work here. And then, so that's going to be your standard. So you take last year, you take your tax returns last year. You got your 941s, you got your 940s, you got your W3 or whatever, and you can take your information there. But you have to go through it and make sure that anybody that makes over the 100,000, that you cap them. You've got to cap them at the 100,000, and so that's going to be taken into your average for it. So, and then there's some special circumstances for seasonal businesses. The applicant may elect to instead use the average monthly payroll for the time period between February 15th and June. So they're taking February 15th through June because that's kind of the time that was affected. And if you're a seasonal business, then they want to make sure that you get the average wouldn't be accurate then, because you may have lost more money given the seasonal business if this was your big season right now and you lost the money during that time period. And then same, you have to exclude the 100,000 on an annualized basis. That gets a little bit more confusing when you're doing a monthly calculation. So we'll talk about that right, because you'd have to annualize it and then figure out what it would be monthly. So we'll talk about that in a bit. But for new business, average monthly payroll may be calculated using the time period January 1st through February. So what if you started the business early this year and then it just, you just got killed by by this thing? Well, then you don't have 2019 numbers. You'll have to use then the 2020 numbers, all we have, which is January, February, same thing for excluding the 100,000. So now then there's going to be a question here as to what exactly is, a payroll cost. It's going to be fairly straightforward if you're like a C corporation or something like that and you process the payroll, then you know what the payroll cost is. But if you're a sole proprietor that reports information on a Schedule C, then you're going to think, well, what can I count the wages to myself in essence as payroll? Because really the IRS kind of counts me as an employee when they charge self-employment. When they start self-employment tax, which is basically kind of payroll taxes, Social Security, and the Medicare taxes. Then we also have, if you're an S corporation, situations where the owner basically pays themselves wages, W-2 wages. And so if you're paying yourself, does that still count as the payroll taxes? So I'll jump over to the law real quick on this. So here's the actual bill. We'll have a link to the actual bill if you want to take a look at it. And I'm going to scroll down through it and see if we can get a definition here. So if we go down to section 1102 and we scroll down, we get a definition down here of the term payroll costs. And it says it means the sum of payments of any compensation with respect to employees that is salary, wage, commission, or similar compensation. That makes sense. Payment of cash or tips. That makes sense. Payment of cash or tips. Payment for vacation, parental, family, medical, sick leave. Allowance for dismissal. Payment required for the provisions of group health care, including insurance premiums. Payments of any retirement benefits. And payment. So notice those are things that may be non-taxable, retirement benefits and things, but they say it's included in the pay here. Payment of state or local tax assessed on the compensation of employees. The sum of payments of any compensation to or income of a sole proprietor or independent contractor that is a wage, commission, income, net earnings from self-employment, or similar compensation that is in an amount that is not more than $100,000 in 1 year as prorated for the covered period. So I'm thinking that means the income on the Schedule C is what I'm interpreting that. So let's look at that again. The sum of payments of any compensation to or income of a sole proprietor or independent contractor that is a wage, commission, income, net earnings from self-employment, or similar compensation. So in other words, like the way you kind of want to think about the payroll, like what is actually payroll? When you think about that from an IRS standpoint, you kind of think about that in terms of what kind of things are people paying, what you would call kind of payroll taxes in quotes B. If you're an employee, you pay payroll taxes because you're a W-2 employee. If you're self-employed, then you still pay payroll taxes. You pay payroll taxes on your net income here. So I would think if I was thinking about this and putting the law together, it's not saying this directly in the law. I would think that the payroll for a Schedule C would be basically the net profit, the bottom line, kind of like the net income of the Schedule C that you would typically pay the payroll taxes, or not payroll taxes here, the self-employment taxes, same thing. Social Security and Medicare. Those are the items that are subject to Social Security and Medicare. So what are payroll taxes? You can kind of think of it, and this isn't written exactly this way in the law, but typically you could think about it as the things that are subject to Social Security and Medicare. For W-2 employees, that's going to be the wages. For a self-employed individual reported in a Schedule C, that would be the net, right? The income minus the expenses for the Schedule C business, which you would then be pulling over to the self-employment tax schedule. But also note it's a little bit confusing as to whether they're talking about the net or the top line, because the sum of payments of any compensation or income. So income, that kind of sounds like they're talking about the top line, which is kind of like all the 1099s that you would get that you'd report on the top line. That would be up here, right? That would be the net income up here, the gross amount. But you're not paying payroll taxes on that. You're paying payroll taxes on the net amount. So I would assume that they're talking here that what would be applicable would make sense to me, that it would be the net amount on like a Schedule C if you were self-employed. Now, the other kind of funny situation you have is if you're an S corporation. There's a lot of single member S corporations out there that basically pay themselves wages, because that's part of what you need to do, because when the money flows through in a flow through from the S corp to your 1040, then there's not payroll taxes usually on that level. So the IRS wants you then to be paying payroll taxes by paying yourself. So in that situation, you got another kind of weird situation. Even if you're the only employee of the company, you're basically paying yourself. But again, you're paying payroll taxes on the amount that you pay yourself. So you would think that would be the amount that you would be considering at that point in time. Also note just a kind of funny situation here is if that's the case, if the net income here happens to be the amount that you would then base the loan calculation on, and you haven't filed your 2019 income tax return yet, you would think that unlike normally, you'd want this number to be low for taxes, so your taxes are lower. But now you're kind of hoping that this number is higher, you would think, right? Because that could result in a higher amount of loan, which could be forgiven at a future time, which is kind of an unusual circumstance. So that's the way I'm reading it. But that's just my interpretation at this point in time. Let's go back on over then. Now I've jumped over to the question and answer. There's a couple different ways they calculate this. It's the same kind of calculation, just has one less step. So I'm on the kind of question and answer format here, and it says, how large may the loan be? And it says the loans can be for up to 2 months of your average monthly payroll cost from the last year, plus an additional 25% of that amount. So how would you calculate that? Well, you could look something like this. You would say, well, the payroll costs, if we calculated them last year, again, if you just have payroll, if you're a Schedule C, you look at the 941s and whatnot, and the W-3s, and you're looking at the payroll cost. Let's say it was $75,000. You would think you just divided by 12 then, and that would give you the average payroll costs. And then they're saying to take 2 of that, so times 2 would be the 12,500, and then it says to add 25%, or 100% plus 25% would be 1.25. So that's going to be the calculation. Now they simplified the calculation on the actual form. So if you go to the form over here, they say, it says up top, we could just look at the calculation, the average monthly payroll. So we'll just take the average monthly payroll, which is going to be the total year payroll costs. So the payroll costs for the year. So it's going to say yearly payroll costs, and we're going to say our 75,000. So we'll say 75,000 here, and then divide that by 12. Same process here to get the average. And so we get the average divided by 12. And then we'll calculate the average payroll costs. That's per month, right? So we're going to say this is per year, this is per month. So we're going to say the 75,000 divided by 12. And I'll put a little underline here. And then they simply say to multiply that times 2.5. So multiply times 2.5. And then I'm going to underline that. And that'll give us our, not the average monthly payroll, but the loan amount. So that'll give us the loan amount. So I'll say loan amount. So then I'm going to multiply this times this, and we get that that 15,625. So just a quicker, calculation on it for the tax form. So again, the key term here, once you have that calculation down, is where the payroll cost. Picking up the payroll costs. Again, it seems fairly straightforward if you're a C corporation and you're filing the W-2s and so somewhat. But again, if you're a sole proprietorship, a little bit more confusing. Even if you're an S corporation, you pay yourself, it's probably pretty straightforward because you filed. It is what it is at this point in time. As of last year, you filed it, you paid yourself. But I think that it doesn't look like that doesn't count, right? Because you paid payroll taxes on that. The funny situation is if you're a sole proprietorship and you're paying self-employment income, what then counts in terms of this 75,000? And then again, if you haven't even filed the return yet at this point in time, then you probably want to file the return so that you can process everything. And like I say, it's kind of funny that you would want, it's kind of funny that you're hoping for your return to be higher because then you could possibly get a larger loan, and the loan could possibly be forgiven depending on what the circumstances are in the current year. It looks to me like that would be the case. Now, note that you might compare this. You might think, well, what if if I just got the 10,000 right now, if I subscribe for the 10,000 and got that quickly, and if that's an easier process, what's the break-even point where this loan would be equal to the other loan? In other words, if I already had the 10,000 from the other loan and there's no strings attached to it, is it worthwhile for me to try to go for this loan? So in other words, when would this number be $10,000, which you would think if it was all forgiven would be kind of the break even, and is it worth jumping through the extra hoops rather than doing the possibly faster process or already having the 10,000? Let's copy this over. I'm going to use a little Excel feature to kind of help us out with this. I'm going to bring this back over so we have the same number there. This should be the same number here. So 15 and 15,625. So then I'm going to go to the data tab. I'm going to click off of it. I'm going to go to the data tab up top. We're going to go to the what if analysis and do a goal seek on it. And what I'm going to ask Excel, I'm going to say, Excel, can you make this number be 10,000. That would kind of be the break-even point if that was, the forgivable loan on here, right? And then I would say by changing this cell, so change that cell. So I'm going to say then okay, and it'll figure that out, right? So say okay. Well, based on this calculation, then if you already had the 10,000, let's say, from the other loan, and you're thinking about should I do the PPP loan? Well, and you're looking for the forgivable portion, then it might not be worth it at that point. If you have something over that amount, then of course it becomes more and more worth it at that point in time. If you haven't subscribed to either loan, then I still think the spirit of the law is to say, hey, the PPP, if you don't need the money right now, you should probably go for the PPP loan, because that's what they're trying to do. If you need the money right now, that's what the point is for the quicker $10,000 kind of advance thing. So I would still think, but in any case, that's the case where you'd think the two for the forgiveness of the debt might work evenly. Now, if your payroll is higher than that, then you would think that if you can forgive the loans, which you still have to see, if you still have to apply for the forgiveness of the loans and make sure, that you do what they want to do so. But then you would think that this would work out better if you could forgive the loan if it was greater than that 48. So those are just my thoughts on this. Again, this thing is changing. These are my interpretations as of this point in time. The rest of the form, if you look at it, is fairly straightforward. So you might want to go through it and just make sure you have all this information on it. Just note that you kind of need last year's tax returns. Again, if you had payroll, you had to file last year's tax returns because you had to send out the W-2s and the W-3s. But if you're sole proprietor, maybe you haven't filed your last year's tax returns, and you may need that in order to push forward. So the rest of it, not for profit, tribal, independent contractor, self-employed. There's a little bit of confusion in terms of what does it mean to be an independent contractor and self-employed, and they have different starting dates there. So that's a little bit of a confusing factor, but fairly. Then you've got the business primary address, the doing business as, the TIN number, which you should be able to have on your tax return. If you're a C corporation, it might be your social security number, business phone, primary contact, and so on. Again, this is probably the more confusing type of calculation that you're looking at here. Purpose of the loan. So the major purpose of the loan, you're hoping, to get a forgiveness of the loan, a large portion. I think it's got to be like 75% or more to get, all of it to be forgiven for the forgiven principal portion of it, payroll. So, but again, payroll seems like it includes self-employment, things that you're paying self-employment tax on. So that could include sole proprietorships for basically the net income calculation. And again, if I jump over to some of their instructions here, is how much of my loan will be forgiven. So if you're talking about the forgiven portion of it, you're talking about getting the loan and how much will be forgiven. You will owe money when your loan is due. If you use the loan amounts for anything other, if you use the loan for anything other than payroll costs, mortgage interest, rent, utilities, and so on and so forth, due to likely high subscription, it is anticipated that not more than 25% of the forgiven amounts may be for non-payroll costs. So then what are the payroll costs again? So the question here lands on that. What are the payroll costs? And like I say, if you go to the law here, to the actual bill, we have our definition payroll costs here. So does that include, sole proprietorships that are paying self-employment tax? It seems like it seems reasonable that it would in there. So in any case, so I've actually gone through the rest of this application in a prior presentation. It looks pretty much, doesn't look like it's changed here or anything. So you can take a look at that. But the main, the difficult part, of course, is the calculation up top. So that's where, generally most people are going to have the confusion with it. And again, just note that this application is the PDF file. Will probably be through your institution. You want to check with your loan institution, and again, they're probably going to be posting that on their website and trying to get you to do that digitally because they're probably completely overwhelmed at this point in time. So those are my thoughts as of now with regards to this. If I see anything updated that's interesting, I will let you know.